Welcome back to Self Invested. My name's Lemuel, and in this video, I'm joined by another one of my favorite YouTube mortgage advisors, Nicola McKenzie, to talk about what's going on in the mortgage market. We're going to discuss the Bank of England base rate and what's likely to happen to it next. We're going to look at how mortgage interest rates have changed over the last 6 weeks, and we're also going to discuss some of the market trends that we're seeing in the housing market and the mortgage market. But before we get into all of that, let's welcome on Nicola. How are you doing, Nicola?
I'm very well, Lem. How are you? Thank you for
Yeah,
having me as
I'm
well.
I'm good. I'm good, thank you. Thank you for joining me and
No
taking
problem.
time out of your busy schedule to have a chat about mortgages.
No problem at all. Like I say, thank you for having me. And actually, I should mention that I have not done a collab yet, so this is my first one.
Fantastic. Hopefully it's a good one. Yeah,
Yeah,
I've been watching your videos for at least 2 years since I started sort of making videos on YouTube, and I really like your content. I think you
thank
explain
you.
things very clearly. You're very helpful, and I think you try to be balanced as well in the views that you give, and yeah, try to be objective. So yeah, I really do
Thank
like
you.
your content.
Thank you
Yeah,
very much. No,
yeah.
yeah, I do try and be balanced because most products and most viewpoints may not be suitable for everyone, but there's often like, what doesn't work for one person might work very well for another. So I think that's why a lot of the time, a lot of the viewpoints in my videos are very balanced because, for example, a 5-year fixed rate, that's not right for everybody. It's right for some people. But then you've got some people that will say, oh, 5-year fixed is the only kind of rate to do. And that's just not, there's no one size fits all with any approach.
And I guess that's why it's difficult to give specific advice on sort of videos because everyone's circumstance is
Exactly,
different. So
exactly.
like all you can really do is talk generally
Pros
and
and
sort of give
cons.
pros and cons, give people things to think about. But really, if they need to get specific advice, they need to contact an advisor to look at their own situation, and that's something I really push on this channel. But before we get
Good.
into all of that,
Yes.
let's find out more about Nicola. For people that don't know you, please tell us about Nicola, the YouTuber, and
Yeah.
Nicola, the business co-founder. What you
Yeah.
do with your YouTube channel, and also what you do with your business.
Yeah. So, YouTube, I set the channel up. Where are we now? We're in September. So it was 3 years in May, I think. 2019, I set the channel up. And it was at that time, it was kind of like I've always enjoyed presenting, I've always enjoyed that kind of thing. So, I thought, why not get our brand out there? Because we're very proud of what we do for mortgages, for all of the services that we provide, insurance advice, etc. But we kind of felt like not enough people knew what we were doing. And YouTube is an obvious way to get our brand and our name out there, but also helping people because I still think that there's so much misinformation and misguidance when it comes to financial services. So for me, it's really about just doing what I can to help to educate people to know, what products are out there, and make sure that we're just giving people the best, well, I wouldn't say advice because we don't give advice in our video, but a very good, reputable source of information, I suppose. And also, as well, so with regards to being, we became national in lockdown. So again, YouTube has just been a great way for us to grow our client base because, technology the way it is, it doesn't matter where our clients are, we can help them. And we're a very technology focused company as well. So when you do come to us for a mortgage, I'd probably say our technology aspect of things is more advanced than your average mortgage company. Of course, I'm biased as well.
Yeah.
Which genuinely we've got a very slick, because we've got in-house software developers, so it's a very slick process in that sense. We take technology very seriously.
Just to add to that, another thing I usually tell my viewers is that if you find a mortgage broker or a solicitor that you really like, and they're not local to you, I don't think that's important in this day and age. I think it's much better to find somebody that you're confident in, maybe that's been referred to you or that you've had a discussion with and you really like their vibe, because the work that they do can be done remotely. I think the only professional that you work with that needs to be local is probably the estate agent, of course, and maybe the surveyor because of their local knowledge of the area. But yeah, with your solicitor and with your mortgage advisor, your mortgage broker, I definitely think it's quality over proximity.
100%. I'm really glad that you brought that point up, actually, Len, because it is a question that we get asked a lot. You know, we're in 2022 now. The banks are very used to, put it this way, if you go for a remortgage, a lot of the time the bank will appoint a legal firm on your behalf, and that will usually be one central solicitor that covers the whole of the UK. So it's something that banks are very used to dealing with now. You know, how often do you even go to your high street bank? How often do you, these things are things of the past. We're in 2022 now, and technology means, like you say, we don't have to be able to walk down the high street and see somebody. It's about quality. At the end of the day, having a good mortgage broker is much better than having an average one or a poor one. Just because you can go into his or her office, it makes absolutely no difference.
Let's talk about the Bank of England base rate. In August, we saw the biggest increase in the base rate that there's been since the mid-90s, and the base rate increased from 1.25% to 1.75%, which is an increase of 0.5%. But I just wanted to get your thoughts on what you think is going to happen to the base rate. Do you think we're likely to see another increase? And if so, are we going to see one as big as the last time, or do you think it will be as it was before, just your 0.25 increase?
I do think that rates are going to go up, because when you look at inflation, we're still far away from where we need to be to meet the Bank of England's target of 2%. So I think that there is only one way that rates can, because I think that, yes, people are starting to obviously maybe think to themselves, oh, my mortgage payments are going to go up if I buy, but ultimately the demand is still there. My personal thoughts are from what I've been seeing and hearing, etc. I do think it will probably be another 0.5% rise.
Let's have a look at a snapshot of the current sort of mortgage rates. 6 weeks ago, we were looking at, for a 2-year fixed with a 60% loan to value, the rate we were looking at was around 3.3%. It was 3.29% was the lowest that we can find. And for a 5-year fixed, it was 3.24, and for a 95% mortgage for a 2-year fixed, it was around 3.79%, and for a 5-year fixed, it was around 3.89%. I guess the thing that we noticed there was that there wasn't much of a difference between your sort of high loan to value mortgages and the loan to value mortgages where you had a sort of big deposit. There wasn't as much reward as there has been sort of historically for having a larger deposit. What I'm going to do now is just compare that with sort of the rates that you have prepared for us, which I think are from yesterday. And we're seeing that rates have gone up, but maybe not as much as they did previously. For a 2-year fixed at 60% is 3.57, and for 5-year fix is 3.63, which is sort of an increase of 0.3 and 0.4. And with the 95% mortgages for a 2-year fix and a 5-year fix, it hasn't really increased that much. It's just increased by, let's say, 0.1. So again, the borrowers that are impacted the most are the borrowers that have sort of bigger deposit. Does that reflect your experience of the mortgage market? Not seeing such a great increase in the mortgage rates, but seeing most of the increase being on the lower loan to value mortgages as opposed to the higher loan to value mortgages.
Correct. Yeah, most definitely. There is definitely at the moment less of a reward, as you've rightly pointed out, for putting down that bigger deposit. Rates have obviously gone up. You've shown that in the examples that you've just given, but it has been, compared to the last 6 months, when you look at it as a whole, it's been a fairly small gradual increase over the last 6 weeks. But again, I think that with the Bank of England announcement next week, we probably will see that shift.
What I'd also like to find out from you is sort of just the general trends that you're seeing in the mortgage market. are approval rates going down with sort of the cost of living becoming more and more acute?
Sure. So I would, in our experience here at DM Mortgages, no, the approval rate hasn't. I mean, the one thing I would say is that some of the lender calculators has tightened up slightly, but again, the way that, well, when a client comes to see us for a mortgage, stretching the borrowing right, to the maximum is, don't get me wrong, for some clients that works, for a lot of clients it doesn't, because we're aware that we are in an ever-changing market. So when somebody comes to see us initially for that appointment, we're aware, because things are ever changing, that a lot of the time we are leaving wiggle room, so to speak, in the advice that we're giving. So therefore, we're personally not having too much of an issue in terms of approvals. No.
What you're saying is you're more likely to see issues with approval rates. You'd really only see that issue if people were maximizing the amount they can borrow, if they were sort of stretching themselves.
Exactly. There's more room for that being the potential situation where the affordability stretched right to the maximum. And this isn't me telling you not to stretch to the maximum, because everyone's situation is different. Depending on where you're buying in the country and what your situation is, that might work well for you. But where there's less wiggle room, there is more of a chance that if the lender changes that calculator or that criteria, that it might not work when you find that property.
I think that's something for people to think about, because as we were saying earlier, the market is changing, rates are going up. So it makes sense, like if you're looking for a property, to think about sort of giving yourself a bit more wiggle room, because costs are going up. I know Liz Truss has announced that energy prices are going to be capped, but that's still going to be that's still an increase from where we are at the moment. Food's going up, rates are going up. So giving yourself a bit of wiggle room doesn't sound like a bad thing to do. But as you said, it's probably best to speak to your mortgage advisor to see what's best for your circumstances. But it's definitely something people should consider.
Yeah, no, completely agree with you. But also as well, I think, again, this is one of the things that I think people perhaps don't have as much appreciation for when they're not in the industry, which I get. But if you are, like when people go for their agreement in principle, or, go and have a mortgage consultation, whatnot, it's very important that that agreement in principle has been done as thoroughly as possible. Because again, the more time that's spent at that early stage, finding the right lender and getting the calculations right, again, the less potential there is for disappointment. So of course, sometimes the market is changing and sometimes these changes will be out of anyone's control. But I think that the more work and prep that you do at an early stage of getting your agreement in principle, again, there's less likely to be an issue further down the line.
And yeah, I guess that's more important than ever.
More important than ever, correct.
Yeah, just because things are changing so quickly.
Yeah.
I think being prepared is probably the best thing people can do.
Absolutely. And we're trying as well, encouraging our clients to touch base with us at the point where, because if I've seen somebody 6 months ago, things have changed. So, and again, don't get me wrong, criteria changes all the time, but we're finding it a lot more in the current climate. So I think it's important as well that people check in with us. We make an effort to follow up with our clients quite regularly whilst they're searching and viewing properties, because before you make that offer on that property, it's a good time to just check in, with us or with your broker, to make sure that, again, nothing's changed that might affect you and that the property price you're looking at still works. Because if you had your initial consultation 6 months ago, then, depending on who the lender is, it's just important to make sure that things are still as they were when you had that consultation.
Just to go into that a bit more, you're not saying that people should wait until they're ready to put in an offer before they speak to an advisor.
Definitely not.
But speak to them as early as possible.
Sorry,
but Yeah, no. But yeah, and in addition to that, when you're about to put in your offer again,
Yeah,
because some time has like it's a fast-moving market,
exactly.
have that conversation again
Yeah,
just to see where you are,
yeah.
just to make sure everything is working. Yeah, no, I think
100%.
that's
So
great advice.
initial consultation, if you know, whenever you are about to start viewing, before you go on any viewings, that's when you need that initial consultation. But then if it takes you 3 months or 6 months to find the right one before you're offering on it, we want to have a chat with our clients at that point.
Just on that, with home buyers, how long in advance can they lock in rates? So if they get an agreement in principle, say today, um, is there a general rule of thumb for how long they're likely to be able to keep that offer in this current market? Or is it vary a lot between lenders?
Yeah, no, that's a really good question. Majority of the time, there is only one lender that I can think of that will allow you to lock in a rate at agreement in principle stage. The majority of lenders, you can't do that. So you get your agreement in principle, but it's only when you actually submit the mortgage application, which is something you can only do when you've found a suitable property, that your rate is locked in.
So before that, it's just when you get your agreement in principle, you're just getting a general idea of what the rates are at that current time, but
Yeah,
you're not
exactly.
that rate that you're being given is not something that you're likely going to be able to secure unless you're secure like the next day or
Exactly.
very soon after that. So how about people that are remortgaging? Um, do they have more options for locking in rates before their term or their fixed term mortgage rate is coming to an end?
Absolutely. Well, okay. So when you have, when you're coming to the end of your mortgage deal, we always tell our clients to touch base with us 6 months before the product ends, because that's not, some people think, often people think that that's too early, but it couldn't be further from the truth, especially again in a climate where we know 6 months from now it's highly likely that rates are going to be higher potentially. So we say get in touch with us 6 months before, because let's say that we do the research and we look at the deals and we find you a great deal and we make an application for it. That lender will then produce a mortgage offer. That mortgage offer, 9 times out of 10, will stay valid for 6 months. So by the time that mortgage gets approved, you might have 5.5 months left on your mortgage product. But if you set the completion date for within that 6 month validity period, then you would still get that rate, assuming your circumstances haven't changed. So 6 months before is a really good time, because it does mean that you can lock in a rate, even though your product isn't finishing for 6 months, you can lock in a rate as it is today.
And as you say, it's more important to do that
In the current
in
climate.
this current climate, yeah,
Exactly.
than it's probably been in the past 10 years,
Correct.
right?
And the only thing I would say with that, a lot of have been a handful of lenders actually that have changed the way they work with this. But say if you're going back to your current lender, often most banks will not release the rate to an existing client until 3 to 4 months before the product expires. But because of the current economic climate, a lot of banks are losing business as a result of that. So they are allowing clients to look at their deals with the bank that they currently have the mortgage with 6 months before, if that makes sense. But again, I still wouldn't see that as a deterrent for someone looking at their options 6 months before, because if you do a remortgage 6 months before your product ends, like I say, 9 times out of 10, when you can access your own bank's products 3 months before, it's likely that those rates are going to be higher than what they are today. But even if they were not, you've still got the flexibility of being able to tap into that option. But the one thing that I would always say as well is always check in with us as a broker or your broker before you go. If you're thinking, oh, going back to my existing lender might work out better for me, before you make that decision, it's really important to have a conversation with a broker, even if you are with a bank that's allowing you to look at their rates 6 months before. It's surprising how many people just go back to their own bank because it's the easy option.
No, I agree. And I guess maybe what people's concern might be is that they may be charged for having that consultation, for speaking to the mortgage broker, and that it may work out cheaper for them just to, go back to their bank. But to have that initial consultation with you, there wouldn't be a charge, would
Correct.
there?
And also as well, I mean, obviously every mortgage broker is very different in how they work, but how our fee structure works. So let's say that you come to me, Lem, you've got a mortgage with Barclays Bank, it's coming up for renewal in a few months. We would compare the rate that we would look at what Barclays can offer you, compare that to what the rest of the market can offer you. But let's just say that we decide after doing that comparison that it is better for you to stay with Barclays, which does sometimes happen. We wouldn't charge a fee at all for that, even to arrange it. It would be a completely free service.
Because you speak to a broker as well, there's no reason why you can't look for yourself. If you do see a product, take it to your broker and say, what about this?
Yeah,
Yeah.
is this right for me? If it is, yeah, exactly. I couldn't agree more, Lem. Yeah, definitely.
You touched on the idea, and we've discussed this in sort of previous mortgage market update videos, that 5-year fixed rate mortgages have recently been cheaper or more competitive than they've previously been compared to 2-year fixed rate mortgages. And if people are remortgaging or getting a mortgage now, it's something that they should look at because it could work out, better for them, especially with rates increasing. But one thing that I've also seen, and I've seen articles on this, is that variable interest rate mortgages are becoming more and more competitive when compared to fixed rate mortgages. If you look online now, the cheapest rate that you're going to get is probably going to be a variable interest rate mortgage. And when compared to a fixed rate mortgage, it's a lot cheaper than it would have been in comparison, let's say, a year ago.
Correct.
Do you think in this current environment, people should be looking at variable rate mortgages, and what things do people need to consider if that's something that they're thinking or a direction they're thinking of going in?
Yeah, sure. So, yeah, the gap is certainly widened between variable and fixed. There are some savings to have with variable rates. It's not for the faint-hearted because, at the end of the day, again, this is really where it comes down to you as an individual. For some people, they're not going to sleep at night knowing that their mortgage payment can change, no matter how much disposable income they've got. And for people like that, I completely understand why a fixed rate makes sense in most cases. With that said, though, there are cost savings to be had with variable. Now, I think it's very difficult to say. I put it this way, I certainly think that there is still a place for a variable mortgage, depending on circumstances. If you're someone that hasn't got much disposable income, then knowing what you're paying each month, is probably going to add more value to your situation. But if you're somebody that's got a fairly low mortgage payment in comparison to your income and you can afford fluctuations in rate, then again, if you're going on a variable rate that doesn't have any exit fees, then you might be willing to take that risk, i.e., I will save a couple of percent now, but if rates start creeping up to a point where I'm feeling uncomfortable, I can still lock in at that point if I've not got exit fees on my variable. So I do think that there is a place for variable rate mortgages, but again, I do just think you've got to approach them with caution, and again, make sure that you get advice on what the pros and cons are and if it's right for you. Because again, if you're somebody that's buying a property that needs a lot of renovation doing to it, is it a good idea to tie into a fixed rate where 99% of the time you're going to have exit fees? Whereas if you're looking to remortgage quite soon on in the process, you might want to consider something without exit fees, in which case most of the time you'd be looking at a variable rate product.
Just between sort of variable rate products, you've got sort of tracker rate mortgages, which are linked to the Bank of England's base rate, and then you have discount variable rate mortgages, which are linked to the bank's internal, the lender's internal interest rate. Yeah. Should consideration be given to, how we should we look at those two rates in different ways? Do you think there's one that may be preferable, all else being equal, to the other?
A standard variable rate, yes, is influenced by the Bank of England base rate, but ultimately, as you rightly pointed out, Lem, the banks, it's based on the bank's internal, their targets. So ultimately, there is less perhaps control's not the right word, but the bank can ultimately set the standard variable rate at what they want to. Whereas if you're on a tracker variable rate, you know that it is going to track the Bank of England base rate. So there is a bit more certainty, I feel, that would come with a tracker rate compared to a standard variable rate to an extent. Of course, you can't control how the rate varies, but ultimately a standard variable rate is set by the bank.
It could have gone up last week for their own internal reasons.
Exactly.
Let's touch on the housing market generally. Have you noticed any slowdown in property prices? I think everyone's expecting house prices to slow because the cost of living's going up, rates are going up. Or I think people are even expecting a crash where prices go down. But what are you seeing from your vantage point as a mortgage broker?
Yeah, so I mean, yeah, the whole debate as to whether or not there'll be a crash, I don't, for what it's worth, my opinion is that I think it's unlikely that there will be a crash. I guess it depends on, the word crash is subjective, isn't it? A slowdown, maybe. A crash, personally, no, that's not my, yeah, I don't think that that's happening, because at the end of the day, the demand is still outstripping the supply. So, the fact is that not enough properties are being built to keep up with the demand. So I do think that things might slow, but at the moment, we're still very busy. We're not seeing any slowdown at the moment. And I think that the slowdown, if anything, would be more so because of issues around affordability. And I also think that in terms of house prices, yes, I mean, if you look at how house prices were going up until sort of a few months ago, things were increasing a lot quicker than they have been over the last few months. But prices are still going up in terms of property prices.
It's just slowed. It hasn't gone backwards.
Yeah, exactly.
It's just slowed. Okay.
Exactly.
Okay.
So yeah, I think inevitably a rate rise will mean that things will slow, but a crash, no, that's not what I see.
Yeah, I agree with you. I think we're more likely to see prices slow, and maybe there'll be a period where it doesn't change, where it's just constant, and we might see even a slight fall. But yeah, I think people are expecting a crash. I think I've even watched videos, I've read articles on it, and I think people are expecting a crash that's bigger than what we saw in 2008. Just because we're going through a crisis. But even the worst predictions, even the worst case scenarios that I'm seeing at the moment are nowhere near the crash that we saw in 2008. I think the worst price drop, or the worst scenario that I saw, was I think a drop in 5%, which isn't the same as what we saw in 2008. And even with that sort of 5%, even if there is a drop in prices, it's not going to be everywhere. I think you're going to see different areas respond sort of differently to what's happening. So, places where where we've recently seen a really major increase, you may see those go back. But in other places, they may just continue growing, but just more slowly.
Correct. And one thing that I would say as well, because I recently did a video on my channel about this very topic, because a common question in light of this speculation that people ask is, should I buy now or should I wait? Now, my personal thoughts on that topic are that at the end of the day, things are rarely going to get any easier to get onto the housing ladder. I mean, people might say, well, you're a broker, you would say this. No, it's just my genuine, honest opinion. If you want to think it's because I'm a broker, then go ahead and think that. But this is just me being real, in that I think that ultimately, if you can afford to buy and it's something that you can do, I think that at the end of the day, if you're in a situation where you're renting, you're not seeing anything back on that investment. If you can get on the ladder and it's viable for you, then I don't see that speculation should be a reason to hold you back. Because let's say, and as well, I think that it all depends on your motivation for buying property. Property in most cases is a long-term investment, in which case a long-term investment, you are going to, if you're owning a property for the next 30 years, in that time, prices are going to go up and down. That's just how that's just life. So if you're on the ladder, again, if you're looking to move to another property, then you're going to find the next property. Let's say hypothetically, if prices have gone down, the next property is going to go down as well. So I don't personally see that that's a reason to say, oh, well, I'm not buying because I want to see how the market's looking. Because there were a lot of people at the beginning of lockdown that said that, and look where we are now. It's much harder to buy than it was 3 years ago. So people that felt it back then are in a much harder position now. And of course, none of us know what the future holds, but that's just my personal thoughts on that.
The last thing I wanted to cover was, I mean, we're in a situation now where the cost of living, inflation is increasing. Every month, the inflation rate's going up. Every month, things are getting more expensive. Fortunately, Liz Truss, our new Prime Minister, has said that energy prices are going to be capped. I think the average $2,500 a year for, I think, 2 years, which is good, but it's still going to be an increase from where we are now. What options from a mortgage point of view do people have if they're remortgaging or if they're taking out a new mortgage? What options do people have to lower their monthly mortgage costs?
Yeah, it's a really good question. So, I mean, there's a few things that people can have a think about. Of course, these things come with the pros and cons, but a longer mortgage term is something to think about. Of course, the longer you run the mortgage, the lower the payments are, but that does mean that you are obviously paying interest over a longer period. So pros and cons, but it does keep your mortgage payments down. Green mortgages as well is something that people should be aware of. So a lot of lenders nowadays are rewarding people for energy efficient homes. So often if your energy performance certificate rating is an A or a B, maybe sometimes a C, depending on who the lender is. So A is your most energy efficient property, G on the scale is the least energy efficient. But if you're an A, B, sometimes a C, then lenders will reward you by getting a lower rate of giving you a lower rate of interest. But again, the one thing I would just say to be mindful of that is that if you see a green mortgage advertised, it doesn't necessarily mean that that's still competitive compared to all of the other options. So a green mortgage, yes, is a way to potentially save money, but you've still got to compare that to what other options, because there could be a lower rate. Just because it's not called green, it could still save you money overall. But green mortgages are useful, or can be, for good energy efficiency properties. I would also say to work on your credit rating if you're somebody that's perhaps got a fair or poor rating. Of course, naturally, the better your credit rating is, the better mortgage deals you're going to get, is the reality. Having a bigger deposit, naturally, obviously, that would mean lower mortgage payments as well. And also making sure that you are going to a broker and not just heading to your high street bank. Again, yes, I know I'm a broker, so you probably think, well, she would say that, but it's genuinely something that I'm passionate about. Not just for the fact that I'm a broker. Genuinely, so many people miss out on so many deals because they've just gone directly to a bank, whereas we're, as a broker, we're getting access to thousands and thousands of products. We looked earlier, Barclays as one bank, I think they had about 35 products on their books. It's a massive, massive difference. And we know, because sometimes we get people come to us after they've been to their high street bank. They call us and say, oh, we've been declined for whatever reason from the bank. And it turns out we do help them in most cases, but equally we also save them a lot more money than they would have had if they'd have continued on that deal anyway. So it's worked out actually a good thing that they got declined, because we've managed to get them a better deal anyway. But going directly to one bank is just a real, the people end up spending a lot more money than they have to in a lot of cases, not every case, but in most cases, by doing that. So I think that's important.
So I think that brings us to the end of our chat. But before we go, are there any other tips or, bits of information that you would like to share with people about the sort of current mortgage and housing environment?
Yeah, sure. I think that one thing we haven't touched on is, well, no, we have touched on rates moving very, very quickly, but I would just say that that in turn means that people do just need to be a lot more organised and move quickly as well. Because as a broker, what we're seeing is that, we do our, so for example, a client might have found a property and we'll try and book them in usually within 24 hours to get the application moving. Obviously, to apply for a mortgage, you need to send across lots of different documents, proof of your deposit, etc. And whilst we do our best to encourage people to get these documents in quickly, people sometimes, I think we're just saying it because literally the difference between you dragging your feet and sending documents a week later, sometimes we are talking to people then about a rate that's now higher because we've not had a full file come in. So the point is that if you are looking at remortgaging or purchasing, just make sure that you are moving quickly.
I think that's more important than ever.
Yeah,
In this current,
exactly. Because there's only so much we can do to get people to move quickly. Ultimately, you've still got to send us the paperwork.
You got to send your pay slips. You got to send your bank statements. Yeah, so get it all prepared.
Yeah, exactly.
Yeah.
So yeah, just move very, very quickly. And I think we've probably covered everything. We touched on the fact that borrowing the maximum is, in the current market, something to just be mindful of, because with things ever changing with criteria and affordability calculators, leaving a bit of wriggle room can be sensible. General points, again, make sure that you've got a good broker on side, as you've touched on. That is really, really, really important, more than ever in the current climate. And also just make sure that you follow us as well, DM Mortgages.
Yeah. So let's go. Thank you for sort of moving smoothly on. Yeah, where if people want to find you, where can they find you? Different platforms.
Yeah, absolutely. So we're on all social media platforms, actually: Instagram, LinkedIn, TikTok recently. YouTube, obviously. So our handle is DM Mortgages on most of the platforms. But again, if you feed to the YouTube channel, which I'm sure you'll put links to, Lem, won't you, in the description?
Yeah, I'll put links to all your channels.
Thank you.
Put them down in the description.
Thank you. And of course, head over to our website as well, because that tells you a lot about us. You can book an appointment directly on the website. And yeah, that's it.
Well, thank you, Nicola. Thank you for joining me to talk about sort of the mortgage market and the housing market. I'm sure people found it useful.
No worries. And thank you for inviting me as well. And I love the work that you've been doing as well. So keep it up.
Oh, thank you. And thank you as well to you for watching this video. If you found it useful, make sure you give it a like and make sure you head over to Nicola's channel as well if you enjoyed what we were speaking about. But yeah, until the next one, take care. Bye-bye.